Welcome back to this channel. This episode we would look at the last few working days in the market. A lot has happened, starting with the interest rate hike, the economy, the Chinese stocks. The Chinese government has responded positively, Ukraine and Russia, and the big elephant, inflation. As expected, the outcome of the Fed meeting yesterday, interest rate was hiked to 0.25%, which is the first in 3 years. The Fed chair was asked about the economy and all that. He says recession isn't particularly elevated. The economy can handle it. The economy can handle the rate hike for now. The rate hike isn't something that we were not anticipated. We already knew that this was going to happen. The only thing that was different was we didn't anticipate that Russia and Ukraine will be at this stage. However, the US economy is going stronger. Labor market is strong. All signs show that it's a strong economy. I am talking about the US market. I am not talking about Nigerian market. I'm talking about the US market. The rate hike yesterday, the market responded positively, even though the tapering was aggressive. But then, for the market to end it yesterday in green, it means, it was just not just in green, it was strong, meaning that the market responded positively to rate hike, meaning the US equity market is strong. The inflation is still very elevated, still very high, 7.9. However, the Fed chair says they know what to do, what they need to do. They need to bring back inflation to 2%. That's a big task. However, we're still to expect, multiple hikes this same year, 2022. Before the end of the year, we would see, like 3 or 4, 5 times interest rate hike. The Chinese government signals support for the Chinese equity market and all that, and the likes of Alibaba closed 37% higher yesterday. The likes of Baidu, Didi, Tencent, JD, they all responded positively. That's wonderful for the market. However, we are still within the correction territory on the S&P 500, Dow Jones. For Nasdaq, we actually tiptoed into bear market some days ago, but we pulled back with the green candle that was day before yesterday and yesterday. So, but we are not out of the wood. We are still within the correction territory for all index. Let's have a look at the chart for the Chinese stocks. Let's have a look at the S&P 500, Dow Jones, and Nasdaq. And also, let's have a look at the interest rate yield and the yield curve, treasury yield curve. And also, we will also have a look at the CBOE, that's the volatility index. So guys, we're looking at Dow Jones Industrial Average. Dow actually closed very high yesterday with over 500 points. That's about 1.5 thousand Dow, and this is daily chart. Let's just drop. I think it actually closed on a resistance, which becomes a support on a daily chart, which is above 20-day moving average. As you can see, we've had 2 bullish candle, meaning that one of the 20-day moving average sits here as support, for the daily candle of yesterday for Dow. This is a strong bullish signal, so we expect to have a bullish run. Let's look at it on a weekly chart. On a weekly chart, I think I already did this some days ago. It still shows that we are on bullish trend, and we, even though we are still below 50-day moving average here, but it tends to show a bullish a bullish signal, and we are on a resistance. There's resistance here, and also okay, we are below 50-day moving average on a daily chart for Dow Jones. Let's have a look at Nasdaq. The Nasdaq also closed higher yesterday. That's about 3.7%. Sorry, I do this, some days ago. I mean, we're always looking at this chart one way or the other. We um, this is a weekly chart, and as I can see, the same similar support and resistance is here. So, we are on trading below 50-day moving average on a Nasdaq, and the Nasdaq closed yesterday at, with 3.7% higher. So we expect a bullish run. I mean, this is a bullish reversal. Whether it's going to continue, it now depends on fundamentals. Ukraine, Russia, and Ukraine. If there's no, I mean, there's always going to be some news, some information, but so far on the chart, we expect a bullish run. Um, let's have a look at it on the daily chart. On daily chart, we can see more. As you can see on daily chart, similar to the Dow, we have strong bullish candle, two strong bullish candle. In fact, this one is an engulfing here. Then the next anchor candle, and here we're now above 20-day moving average. This is very significant. The other day, here we actually we tiptoe into the bear market, with dropping about 22% from the recent high. Let me show you that this is the recent high. I think is in January. From here down here, it was about 22%. 22% here. Okay, yeah, officially was 22%, which was a signal that we have tiptoed into the bear market territory. So, but we are still we're still within correction territory, but we are above 20-day moving average. Let's have a look at S&P 500. S&P 500 actually closed it yesterday about 2.2%. Let me just take this off. I think, as I said, we are always checking this index. So, here the 20-day moving average is sitting as support here, and also we are above 20-day moving average on a daily chart for the S&P 500. But as you can see, support turn resistance, resistance turn support. But we're still within the correction territory. So there's a resistance there now. You see, we're within correction territory. Let's have a look at it on a weekly chart. On a weekly chart, wow, it's still a bullish run. We're still bullish. If you have been buying the dip all this while, well, you might be um, it might work well for you if this bullish run is going to continue. But as you can see here, there's a resistance there. I mean, there's a support term resistance on a weekly chart for S&P 500. Let's have a look at the Chinese, the SENG index. The SENG index it represents the Chinese stocks, Chinese tech stocks and all that. Yeah, like this. Um, you know, this it was a reversal. Uh, this is a weekly chart, so this is a reversal signal, reversal candle, but then we're still trading below 20-day moving average, and it's a downward trend. But let's have a look at the SENG itself. Um, SENG, this is the SENG index. The SENG index, you see, it just tells you that we're still on a downward trend. and this is there's a support on resistance here. It is the resistance, so it's below the resistance. And this is we are trading below 20-day moving average. But as you can see, it's it has been in the channel, higher low, lower low, higher low, lower low, down. But this is a reversal signal, the reversal signal based on the response of the Chinese representative of government on, signal a support for the Chinese and SENG stocks. So this is it. However, some of their stocks actually did extremely well. The likes of Alibaba actually closed with about 37%. I'm not sure Alibaba has done that before in recent years. Let's look at Alibaba. Baba. Baba. Okay, this is Baidu. I will have a look at that. Baidu also. Baidu. Wow. Wow. Baidu actually closed at 150. I actually didn't see that. You know, Baidu. Um, let's look at this. This is um, a bullish engulfing. This is a bullish engulfing. Baidu, the bullish engulfing, but we're still below 20-day moving average. That's a bullish engulfing, so we expect a bullish run. However, pre-market is already shows that it has lost about 6%, no, about 4%. But then this is a bullish run. Bullish engulfing. Let's have a look at it on a daily chart. On a daily chart, wow, look at it. In fact, there's a gap up here. As I often say, this gap has to be filled one way or the other, whether now or later. But there's a gap up here, and you can see that on the daily chart we've gone above 20-day moving average, where 50-day moving average is serving as resistance for this anchor candle on a daily chart. Let's have a look at Baba itself. Alibaba. Baba. Alibaba itself. Alibaba closed at 140. Wow. Let me take this off. I think Alibaba actually open the previous close was 75 or 76. So it gained about 37% yesterday. Now you can see there's a gap up here from about 73, to 104. But if you can see, it has been on downward trend. Let's have a look at it on a daily chart. See, on the daily chart, it has been downward slope. So if you have bought the dip one way or the other, good. You just might be extremely lucky, But that is why sometimes we say buy the dip, buy the dip. But I can understand if you are hesitated in buying the dip on Alibaba. You know how many dip we've bought, but then it just tells you that strategy may still work, but however, we're still below 20-day moving average, and it appears that it might just be consolidating around here. Let me draw this so you can see. Yes, Alibaba might just be consolidating around there, even though this is even a resistance. It could break this resistance up. Let's see what will happen today. Let's have a look at other Chinese stock. Let me see. Okay, let's have a look at CBOE, the volatility index. Wow. Okay, that's the rate. This is the index. I wanted to say, okay. Now, where I have analyzed this chart, it is index, multiple times on this channel. We will always do. Let me come, with here. This is a support on resistance, depending on at what time or where, it closed as 26 yesterday, and the market was green. But what you need to know is that previously, this is on we're trading with this on above 20-day moving average, but the previous close was about 31, and the high was 37. So it's actually coming down. The volatility index. This is a fair gauge of how the market, how
people feel about the market. What seems to be normal range is when you have it around 19 to 20. It means that there's stability in the market. But with high volatility, you have it as high as 37, 35, and in fact, um, this was this happens to be the highest so far, and that was 2020. That was March 2020. That's in the last 2 years. You see, it spiked. Now, what you need to understand is whenever the CBOE is green, the market is usually red. So whenever you see it red, the market is usually green. And yesterday the market was green. Let's go and have a look at the inflation and the yield rate.
So this is the 10-year break-even inflation rate as of yesterday. The market, as I mentioned, closes around 2.93. 2.93. Let's have a look at the 10-year Treasury rate. The 10-year Treasury rate is actually 2.19%. So you can, but also what you can see, different rates, it changes on the based on the day. I mean, sometimes it fluctuates. The days are not the same. The rate changes depending on the value and on the treasury treasury bill. It's not a constant rate, but at least here you can have an idea. You can check each date to see the rate. This is the value, the date, the value, the date, the value. Let's have a look at. Okay, this is as of what date? As of yesterday, 16th, which is 10 years rate is at 2.19 compared to 2.15 the previous market days. Guys, we have seen the chart for the S&P 500, Dow Jones, Nasdaq. We have also seen, the SENG index, the Alibaba, and the other Chinese stocks. Do your valuation, as I often say. I mean, I always ask you to do that. Do not just buy any of these stocks without you carrying out proper evaluation of these stocks. Make sure they fit into your own criteria of stocks you add to your portfolio. Thank you for subscribing to our channel. Thank you for the likes and follow. We would all continue to produce content that will support your investment journey. Thank you.